This video is about how you need to be responsible for the money that you're bringing in and how you need to be responsible for any expenses that you pay out and what deductions you can take as a driver. So this is a heads up for your Uber drivers, Lyft drivers. Pay attention. If you are driving for money, then this is for you. We don't want you to be caught off guard come December 31st, year's over, and you get a 1099 in the mail. Because guess what? Every dime you make driving for money is taxable. We have a court case here that we want to spell out just so you can get a little idea of what's out there and what can happen. This may be a little extreme court case, but let's take a look just real quick. So there's a court case out there where there was an Uber driver. He just decided to start driving as an Uber driver, kind of for fun and just to fill in his free time. Well, by the end of the year, he had other friends coming in and driving underneath his Uber account. So they were logging in as him whenever they were driving. And so this guy, we'll just call him Fred, for lack of a better term. His name is Fred. He had 3 people underneath him using his account driving when he couldn't do it. So they were logging in as him. He was getting all the money. So at the end of the year, end of the day, he gets it, what's we would refer to as a 1099K. He got that. It was $595,000. So just shy of $600,000 in income that he is expected to pay taxes on. So he got audited because he didn't report any of this money. He didn't know it existed. He wasn't aware that it was going to happen. So he got audited. At the end of the day, he didn't have any records for paying those other people. He had reimbursed them for mileage sometimes he reimbursed them for gas receipts. He didn't have records for any of this. At the end of the day, this video is about how you need to be responsible for the money that you're bringing in and how you need to be responsible for any expenses that you pay out and what deductions you can take as a driver. Let's dive into that for a second and let's pretend for a moment that you are into driving a lot and you're going to get a 1099K at the end of the year showing you made $600,000, but yet you had people underneath you driving under your account. So if you did that, then you'd want to make sure and keep track of how much money you're paying them, and then you need to issue them a 1099 at the end of the year for how much you paid them. But if you're an Uber, a Lyft driver,
working on your phone,
you're working just by yourself, then you need to know what deductions you can take. Honestly, there's not a ton of them out there. So the main deduction you can take is mileage. So we're going to let Kaylee tell us a little bit about how you take that deduction and how you keep track of it.
So you're going to want to keep track of the miles you're actually driving for your rides. The miles to go pick up the person does not count. That's your commuter miles. Those are not a deduction. So you're going to need to keep track of from when you pick them up to when you drop them off. So those are the main, and there's apps and other things like that that you can track, and even your Uber and Lyft apps, whatever you're using, probably keep track of those things for you. So those are the mileage you need to know is pick up, drop off miles, not to and from, not every mile you've driven for the entire year, just those for actually for the job itself.
So they can't just say, well, at the beginning of the year, my car had 10,000 miles on it, and at the end of the year, it has 40,000 miles on it, so my deduction's 30. So they can't just say that.
No, they can't.
Okay. We have to have some sort of record keeping.
Yes, and it's the burden of proof is on the taxpayer, so you have to be able to prove these things. The IRS doesn't just take your word. They don't have to come up with the proof that why it's not that way. You have to come up with the proof of why this is the mileage you took. So a calendar where you write the beginning and ending down, an app where you start and stop, whatever it is, something along those lines is the best way to keep track of this because you need proof for tracking that mileage. And unfortunately, that's really one of your only deductions as someone in this gig economy such as Uber, Lyft, or even like your DOORDASH or your Uber Eats, something along those lines. There's just not a whole lot of deductions for you. So your mileage is your big one. So you're really going to want to be sure you keep track of every single mile that you can deduct, because that's where you're going to get those tax savings for this.
So what does mileage encompass? Because we're talking about keeping track of mileage, but in my mind, I'm like, well, what about my gas receipts? Or what about the insurance for my car?
So you can either take actual expenses, which Debbie's talking about here with your gas or your insurance or upkeeping your vehicle. That mileage is a standard rate that they give you. It's determined by the IRS, and it changes year to year with cost of living and things like that. So that is like a per diem or whatever you want to call it for each mile you drive, and that encompasses what it's probably on average costing most taxpayers for gas, insurance, and upkeep of your vehicle. So that's like your wear and tear price without actually keeping track of your actual expenses. Because in a situation like this, you can't take all gas receipts, you can't take all insurance, you can't take all of your wear and tear, upkeep of your vehicle, because not all the time you're driving is for Uber or for Lyft or for whatever you're doing like this. So you're going to have to keep track of what percentage of your vehicle is being driven for this kind of business as far as Uber or Lyft goes, and then take a percentage of your gas, percentage of your insurance, and a percentage of your upkeep and wear and tear on your vehicle. So those, one or the other, neither one of them is going to be an easy thing to keep track of, but you're likely to get a higher deduction going with mileage than you are with actual.
Right. You're likely to get a better deduction with mileage, and it's frankly, in the end, it's probably going to be easier to keep track of that than trying to keep track of every single gas receipt. I'm going to guess that most people aren't very good at keeping track of all those receipts and keeping track of that. So mileage is probably your best option, and it's probably going to stand up best in an audit also, because you can just prove that easier than your percentages of your gas and fuel and wear and tear. So if you are a driver, Uber, Lyft, whatever it may be, and you're getting paid, make sure that you are keeping track of that mileage, and make sure you're aware of how much money you're making, because at the end of the day, you do have to report that income. We would love for you to like our video, subscribe to our channel, and make sure that you share this video with your friends.